The Indian stock market scam was a market manipulation carried out by Harshad Mehta with other bankers and politicians on the Bombay Stock Exchange. Hello, my YouTube family. I welcome to all of you on my YouTube channel. I'm your well-wisher, healer, and your friend SHAZIA Khan. Hope you are well and taking care of yourself. So let's start today's video. And don't forget to subscribe. Please like and subscribe my YouTube channel and press the bell icon to get new video updates. So I am talking about, is there any scam in share market? Mehta used its loophole to borrow money from banks, which he then used to buy shares in the stock market, inflating their prices. He also manipulated the share price of certain companies by buying large quantities of their shares and creating a demand for them. What is the biggest scam? Barney Medford Ponzi scheme. The Barney Medford scheme was one of the largest investment fraud in history, made or promised high returns through a fake investment strategy, but instead operated a Ponzi scheme using new investors' money to pay off earlier ones. Are stock real or fake? The stock market is a real entity or not a fake one. The stock market is a collection of exchange where traders buy and sell shares of publicity traded companies. The stock market is a vital part of economy as it provides companies with access to capital and enables investors to own a part of the company. What is the biggest scam in Indian stock market? The Harshad Mehta scam and infamous securities scam in India involved stockbroker Harshad Mehta manipulating the stock market through calculated trading. He exploited loopholes in the banking system to manipulate stock prices. The world of stock markets, with its promise of wealth and prosperity, has unfortunately been marred by several notorious scams throughout history. These fundamental activities have shaken investor confidence, caused financial turmoil, and resulted in sustainable losses. Here are six biggest stock market scams. Harshad Mehta, the Harshad Mehta scam, an infamous securities scam in India. Enron scandal. The Enron scandal was a notorious corporate fraud case that unfolded in 2001. Enron, an energy company, engaged in accounting manipulations and off-balance sheet transactions to inflate profits and hide debt. When the fraud was exposed, Enron filed for bankruptcy, causing significant financial losses to shareholders and employees. The scandal led to the dissolution of Arthur Andersen, one of the world's largest accounting firms, and prompted regulatory WorldCom accounting fraud. The WorldCom accounting fraud was a major scandal that rocked the corporate world in 2002. WorldCom, a telecommunications company, engaged in fraudulent accounting practices, inflating profit and consulate expenses. The scheme involved improper capitalizations of cost, fictitious accounting entries, and improper revenue recognitions. When the fraud was uncovered, WorldCom filed for bankruptcy, resulting in insignificant financial losses for investors and employees. The scandal exposed flaws in corporate governance and led to increased security regulatory informs. The scam led to the company's bankruptcies and significant losses for investors. Next, the Barney Madoff scheme was one of the largest investment fraud in history, made or promised high returns through a fake investment strategy. The instead operated a Ponzi scheme, using new investors' money to pay off earlier ones. The scheme unraveled during in 2008 financial crisis, resulting in billions of dollars in losses for investors. Madoff was convicted and sentenced to 150 years in prison. The case highlighted the need of better regulations and due diligence in the financial industry. We all know about Harshad Mehta scam, and there are hundreds of scams happens in the stock market. So, is share market too risky? The stock market is a risky investment and you could lose money. So, always invest with the cautions and only invest money you can afford to lose. Here are some additional tips for beginners who want to make money from the stock market. Start with a small amount of money. Has anyone become rich from stocks? While this is quite difficult to achieve, it is definitely not impossible. There have been many cases in the modern world where investors have become rich through their investment in stock markets. Let us take a look at how investors can make the most of stock of market to become rich through long-term wealth creations. Harshad Mehta committed fraud without bank receipt of rupees 5 billion from State Bank of India and an individual scam rupees 14 billion using fake bank receipt. The Indian television series Scam 1992 is based on his life and fraudulently activity. Trevor Milton, founder and former CEO of hydrogen trucking company Nikola Inc. So, is trading safe to earn money? While there's no guarantee that you will make money or be able to predict your average rate of return over any period, there are strategies that you can master to help you lock in gains. While maximizing losses, it takes discipline, capital, patience, training, and risk management to be a successful day trader. Is stock market pure luck? The right stock. Picking the right stock at the right time can also be a matter of luck. Traders may just happen to invest in a low value stock that skyrockets in a short period. Erratic market behavior. The stock market is not always rational and can sometimes behave inerratically. How many people fall in share market? It is estimated that nearly 80 to 85% of intraday traders end up losing money in the stock markets. Normally 70% of the intraday traders do not last beyond the first year and 90% do not last beyond the third year. What is the king of share market? Popularly known as the Warren Buffett of India, Rakesh Jhunjhunwala is one of the greatest stock market investor India has ever seen. Born on 5 July 1960, Rakesh Jhunjhunwala was a stock market veteran. Who is number one in share market? Reliance Industries, a conglomerate holding company, is the largest company in India by market cap. It operates in various sectors including energy, petrochemicals, textiles, natural resources, retail, and telecommunications. Is trading skill or luck? Profiting from day trading is possible, but the success rate is inherently lower because it is risky and requires considerable skill. And don't underestimate the role of that luck and good timing play. A stroke of bad luck can sink even the most experienced day by trader. In investing a skill, investing especially over relative long period of time is much more a matter of a skill than a luck. Thank you very much. Don't forget to subscribe.